Hi, this is Magda from Interiors Exteriors. In this episode, we won't be focusing on interior design, but rather on another topic related to housing, which is the anti-speculative cadastral tax. This topic is coming up more and more often in public debate. It has its opponents and supporters, but I feel like we're not discussing it in enough depth. That's why in this episode, together with my guests, I'd like to discuss various issues with you, including possible risks. To start, I'll introduce the guests of this episode, then we'll explain what the cadastral tax actually is, what it's about, and why it would even be introduced. After that, we'll move on to the specific points that raise the most concerns and controversies. Let's get started.
Krystyna Siwińska, Member of Parliament, Vice Chairwoman of the Infrastructure Committee.
Jan Śpiewak, Save Poland Foundation, PhD in Sociology.
Dr. Maciej Schlinder, philosopher, sociologist, economist, member of the National Council of the Together Party and the Polish Economics Network.
What is a cadastral tax and what would be its purpose? A cadastral tax is simply a tax on the value of owned real estate. And just like now, we also have property taxes, but they are not linked to their value, only to the square footage, and they are also very symbolic. The cadastral tax is supposed to be a certain percentage of the property's value. And for example, if it were 1%, then a person owning a large apartment in Warsaw could have to pay. For example, it's estimated at 15,000 a year, while a person owning a small studio apartment in Podkarpacie might have to pay a few hundred zlotys per year. However, what's crucial is that in the current debate, no one is proposing to introduce the cadastral tax for everyone, only for those who own several apartments or more. That's why the term anti-speculation tax is being used more and more often, as it better reflects what this is really about.
I believe that a cadastral tax on the third apartment is a necessity in Poland for many reasons. First of all, let's take a look at the current situation on the housing market. Already today, a huge portion of new apartments are being bought by investors, not by people who will actually live in them. Investors buy these apartments and keep them empty or later rent them out. This means that, first of all, we have an increasing problem with vacant apartments, and secondly, we have a problem with rising housing prices and declining quality of building and neighborhood management, as well as the quality of the buildings themselves. If most apartments are bought by people who won't live in these buildings, then why would they care about how these buildings function or look on a daily basis? So, to put it simply, this is a huge dysfunction. We've turned apartments into investment assets. That's what happened because, in fact, investing in apartments is practically untaxed. First of all, holding apartments is basically untaxed. Today, the property tax is a tax on the size of the property. It doesn't matter who owns the property or where it is or how much it's worth, they pay the same tax. It's also a very low tax rate, about 1 zloty per square meter per year. And the income from real estate itself is also taxed very lightly, and there are also many loopholes that allow it to be taxed even less than it theoretically should be. Today, you can rent out apartments on a lump sum basis up to 200,000 zlotys, I believe, and if you're married, at an 8.5% tax rate. So that's really very little. If someone earns over 120,000 zlotys a year under the standard tax scale, they already pay 32%. We can see that the income from capital from owning apartments is actually taxed about 4 times less than work. There's also the question of where people get these apartments from, and we know well that a large part of these apartments simply comes from inheritances. Inheritances in Poland are also not taxed, so this serves the ongoing accumulation of capital. Now consider someone who inherited an apartment from his grandmother, bought another to rent out, and the tenant is paying it off. Soon, he'll have 2 paid-off apartments. Then, what will he do? He'll buy a third apartment, and so on and so forth. Someone who rents an apartment, gets no parental help, and lives off highly taxed work will never afford to buy that apartment at current prices. So this creates a two-speed society. The speed of renters who live off the work of other people from the fact that someone is paying off their loan or living in an apartment that, for example, they inherited. And the other group, which will be working forever. This is very dangerous. It limits social mobility. It creates huge inequalities between people. So, taxing and targeting those who buy up real estate is necessary such a tax should also apply to business entities. In my opinion, there shouldn't be situations at all where a company, corporation, or fund owns apartments that are meant for living in. Commercial premises, yes. But why should apartments be subject to being bought up by funds that have even greater possibilities for tax optimization? Well, that's absurd to me. But if we've already allowed this, then a tax from the third apartment onward should also increase. I believe such a tax should be progressive. That means it should go up with each additional apartment, so that we can eliminate the possibility of someone owning several hundred apartments or even several dozen apartments. I think that's an absolutely pathological situation.
According to analyses published on Wyborcza Biz about rental apartments, 77,000 people own at least 3 apartments for rent and manage almost 500,000 units. Assuming a flat tax of 1% for this pool of properties and an average property value of 400,000 just from this group, we would have 2 billion in revenue annually. With higher property values, a progressive tax, and by adding to this pool the vacant apartments used as vacation homes or for professional purposes. By including all those that simply aren't in the rental pool, the revenues from the cadastral tax could be much, much higher. But what's crucial is that this tax is not primarily about revenue.
The Razem party supports a cadastral tax starting from the third apartment. It's important for such a tax to be progressive, meaning the first 2 apartments are exempt from the tax, the third is taxed at, for example, 1%, the fourth at 2%, and so on. Such a tax would significantly reduce speculation in the real estate market. The costs of owning multiple apartments would be higher, which would encourage people to sell them, making apartments cheaper and more affordable. On the other hand, the cadastral tax would also be a source of income for local governments, estimated at around 2 billion zlotys. Local governments could use this money to build municipal housing, thus further increasing the availability of apartments.
But why should we actually want to limit investing in real estate? Because housing is a basic good necessary for life, just like food, medicine, water, or electricity. Imagine what would happen if suddenly someone bought up half of the farmer's crops. What would happen then? There's a lot of food on the market, so at first we probably wouldn't notice what happened, but over time, food prices would start to rise. Demand would exceed supply, and sellers would quickly realize that if they kept selling at the current prices, they'd soon be left with empty shelves. And the prices would gradually go up, and suddenly, someone who bought for 1 zloty per kilogram could now sell for 2 zlotys per kilogram. Quite a markup, right? Good business. But who would pay for all those profits? Ordinary people, everyone who buys food. And it's similar with apartments, except we don't buy them as often, so we're not all equally outraged by this situation. Of course, this comparison isn't perfect. There are plenty of differences between these markets. For example, food can be imported, but apartments can't. However, I just wanted to give a simplified outline of this supply and demand mechanism and how it affects the market and prices. In a situation where we have a stable supply, but demand is growing because in addition to people looking for a home for themselves, there are also investors who are ready to buy not just 1 apartment per person, but for example, 10 such apartments, then demand significantly starts to exceed supply, and this leads to an increase in prices. What's more, when some people who were planning to buy an apartment for themselves don't do it, the demand for rental apartments increases, which again encourages investors because renting becomes even more profitable. This is a mutually reinforcing mechanism. And it's not about getting rid of rental apartments now, because in many life situations that's a much more convenient option. It's just about limiting the share of investors in the market so that people who want to buy an apartment for themselves have a better chance. We're introducing a tax, and then what? How is this supposed to work?
What might occur if we implemented this tax? Most likely, some of these people would have to sell those apartments, which would increase the supply of real estate, so prices would also go down. Prices would also drop because many vacant apartments would finally be rented out, since today it's often profitable to keep apartments empty, or they would be sold. So the supply of real estate would also increase, it would reach ordinary people, and both real estate prices and probably rental prices would also go down. This claim that the tax would be passed on to tenants is, in my opinion, a fiction. Today, rental prices are at their maximum rate, the one set by the market, and if landlords could increase rental prices, they would have done it a long time ago. They don't do it because the market sets these maximum price ceilings. So this is another thing that, in my opinion, is an argument for introducing such a cadastral tax. Why from the third apartment? Why not from the third? Why not from the first? Why not from the second? Of course, that's because, first of all, we don't want to target those people who live in these apartments, and secondly, we'd like to exclude those who inherited an apartment somewhere or bought an apartment for their immediate family. There are also ideas that this cadastral tax would be introduced for surplus apartments based on the number of children. So if someone has 3 children, for example, they could have 3 apartments exempt from the tax. I'm open to such proposals. Of course, such rules could also be introduced. Although here the question arises, why can't someone who buys such an apartment simply transfer it to their children? This is also an action that is exempt from tax anyway. So here, one can consider the exact way of introducing this tax, how it should function. But that doesn't change the fact that we should target those who buy up apartments, those who keep apartments empty, those who have simply made this actually such a very low taxed income.
Let's discuss this even more thoroughly, step by step. Owners subject to the new tax have 2 options. They can either sell the apartment or pay the tax. Let's consider both scenarios. The first option, selling. When some of the apartments return to the market, the supply will increase, and this should either lead to a drop in prices or stabilize prices. The outcome depends on how many apartments actually enter the market. It comes down to the basic laws of supply and demand. The second option is a tax. Owners who decide not to sell their properties will be more motivated not to keep them empty, but to make sure these properties generate income to cover the tax. So there's a good chance that some vacant properties will return to the market, not necessarily for sale, but for rent. And when the supply on the rental market increases, prices may also drop, or at least remain stable. At the same time, revenue from the property tax could help better fund social housing, which in the long run also contributes to stabilizing real estate prices on the market. Regardless of what the owners of apartments subject to the property tax decide, whether they choose to sell them or pay the tax. Either way, we are activating mechanisms that should increase the availability of apartments for people who want to live in them. As Yannick already pointed out, some people are afraid that the owners of rental apartments will simply pass the cost of the property tax on to the tenants. However, remember that it's not as simple as it might seem. First of all, not all rental apartments will be subject to the property tax, so owners with several apartments or more will have to compete on price with people who only have 2 apartments, or just one and they rent it out, because situations like that also happen. For example, if someone bought an apartment in one city but has to move to another, instead of selling it, they simply rent out their own and live in a rented place from someone else. And all these apartments will still remain on the market and won't have any reason to suddenly raise the price significantly. And secondly, there's a good chance that the rental market will be supplied by apartments that have been standing empty until now, because their owners lack the motivation to rent them out. That's why raising prices in such circumstances won't necessarily be that easy, because tenants will simply be able to choose cheaper options. The intended effect of introducing the cadastral tax is to make buying multiple apartments less profitable, and so that, as a result, investors would be more willing to invest in Polish companies, in Polish technology, something that actually develops our country, instead of buying up real estate and speculating on a basic good. And what's also important, the revenue from the cadastral tax could help develop social housing.
What we can definitely do is make rental housing more available, but within a local government structure. I am a big supporter of TBS, and we have a fantastic example in Gorzów Wielkopolski, where right now there is an investment underway to build 2 buildings specifically for potential TBS residents. It's in a really nice location, very well situated, right next to schools, shops, and with direct access to public transportation. And the fact that the investment itself is being carried out by the Gorzov Social Housing Association. This also gives residents the assurance that, first of all, these apartments will be built well, secondly, on time, and thirdly, later on as well. The operation of these facilities, just like the existing ones in the Gorzov Social Housing Association, will also be under special supervision and care. Does introducing and enabling such taxes, which would in some way minimize the speculation we talked about earlier, make sense? There is a lot of talk about introducing taxes, especially from the left, who show that it is possible to introduce taxes. A kind of cadastral tax on additional apartments, the second, third, fourth, and so on. But there will always be a discussion about whether it's the second apartment that should be taxed, or the third, or the fourth. It's hard to solve. I would go for housing programs that, first of all, would allow local governments to provide resources to residents, but also to themselves. Local governments will use resources that will, first of all, allow them to renovate their municipal assets, bring them to a condition where it will also be possible to create tenant mobility programs, and such programs are currently being proposed in Gorzov. That by renovating and making such facilities available to residents, we will also create housing mobility. The second thing is the aforementioned TBS, which I'm actually a big supporter and ally of, because a well-managed TBS can give a chance to those people who don't have creditworthiness but want to have their own apartment. I would also really think about this path to ownership here, because it's a different formula, right? If I can afford to buy an apartment, I buy one. If I don't have that possibility, I use these municipal resources, and we also need to distinguish between these two options.
Doubts and risks. The visions are beautiful, but as they say, the road to hell is paved with good intentions, and unfortunately, there's a lot of truth in that. Even if we believe that the anti-speculation tax will actually bring the results we hope for, it's easy to see that the devil is in the details and not everything is so obvious. And introducing a law that will be full of loopholes or too costly to implement may undermine its purpose. What issues raise concerns? I'll start with the most difficult ones. The assessment of property value. This issue raises the most doubts, and there are different ways to approach it. The most precise would be appraisers' assessments, but they would also be very expensive. The simplest seem to be average rates for individual areas, but those can also be very unfair. Of course, one could say that worrying about fair treatment of real estate speculators is the least of our concerns, but still, I think it's worth considering.
We are not prepared when it comes to property valuation, because the cadastral tax, we're talking about apartments here, but in general we're talking about buildings, land, all types of assets. So creating such a property valuation database and accessing it is a long, long road ahead of us, and a significant burden for local governments. Therefore, without preparing this and without a rational, reasonable approach, it will be difficult to implement.
One of the main technical problems related to the cadastral tax is the cost of property valuation. It's best to pass such costs on to the property owners themselves, just like Ireland does. To prevent fraud and attempts at undervaluing properties, which would lower the amount of the cadastral tax, Ireland imposes high penalties on anyone who sells such properties for more than 110% of the appraised value. Another way is to require that significantly undervalued properties be sold to the state treasury. These methods effectively prevent this type of fraud. Besides, shifting this valuation onto property owners reduces their willingness to own a large number of apartments, and thus the very function of the cadastral tax is further strengthened.
I can add from my own experience that when I worked at the real estate agency almost 10 years ago, we already had very convenient access to transaction prices in the form of an online map. So I think that such access for all citizens is definitely within our capabilities. And probably some people will be outraged by such a vision, because money is a bit of a taboo topic. But first of all, the truth is that when you buy, I don't know, a coat in a store, others can check how much that coat costs on the store's website. Somehow nobody has a problem with that. And when it comes to real estate, even without knowing the exact amount, we can definitely roughly estimate how much a property in a given area is worth. So it's not really a secret anyway. And on the other hand, there are countries where you can even check other people's salaries, so the transaction price doesn't seem particularly complicated or sensitive here. And remember that in general, land and mortgage registers are accessible to everyone. Of course, not everyone is easy to find, but overall, it can be done. And there is much more data there than just the transaction price, because that one actually isn't included, but there are, for example, amounts related to loans or our PSEL numbers. And somehow we manage, even though this data is already available and our neighbors can easily just Google it without any problem. What's more, data on transaction prices is already being processed and available on GoPortal, although admittedly in a very unclear form. Nevertheless, this shows that we're not so far behind on this topic, and creating a transaction price database that's accessible, clear, and convenient for everyone might actually be simpler and faster than we all think.
This is an idea that was historically used in Western Europe, where you would simply enter the value of the property at which someone was willing to sell it to the state. And based on that, the property price was determined. So there was no need for any appraisals, just such a declaration was enough. But of course, today in the digital world, determining such a property price, the value of that property, shouldn't really be a problem.
Counting apartments. Although it might seem that in the phrase "from the third apartment" there's nothing unclear, when we look at it more closely, it turns out that it's not so obvious after all. Imagine a married couple with joint property who own one apartment. And now suddenly, she inherits 25% of an apartment from her parents and 10% of an apartment from her grandparents. She actually has 3 apartments, one with her husband, one from her parents, and one from her grandparents. So should she pay property tax in this case, or maybe we should add up her shares? And then it will turn out that she either has 1.35 apartments or 0.85 of an apartment, depending on how we approach the marital property. And for me, it's not obvious at all. Should we treat this as owning 3 apartments, owning less than 1.5, or even owning less than 1? Intuitively, we might want to completely ignore the small shares. After all, if someone owns 2% of a property, they can't really manage it. But then, investors would quickly come to an agreement to buy properties jointly. So, for example, everyone would only have 10%, which wouldn't be subject to the property tax, and in this way, they could buy even 100 apartments. Only together. And none of them would pay any tax. Well, it can't be like that. The law must prevent such circumvention of the regulations. And I think that taxing even those smallest shares can also bring a lot of good. Because it will be a motivation to finally sort out various issues related to shares, mostly after different inheritances. When one property has several owners, they can't come to an agreement because everyone thinks it's better to just wait it out. And eventually someone will buy them out at a high price, so it's not worth selling those shares cheaply now. As a result, no one invests in proper renovations there. Often, a given property ends up vacant, and nothing good comes out of it. People try to come to an agreement. There's also the question of which apartments should be the first, second, third, fourth, and so on, which is especially important in the case of introducing a tax. A progressive tax, when this tax increases with each additional property, and by the 6th one it won't be, just 1%, but for example 5%, then it really makes a big difference. For example, consider the purchase dates of the first and second properties. These would be the 2 oldest. I think I would even make it easier for taxpayers and simply arrange the apartments from the most expensive to the cheapest, where the 2 most expensive wouldn't be taxed. However, there are also ideas related to determining where you actually live, so that this apartment would be considered the first one. However, I think that nowadays, with people giving up official registrations and being so mobile, it would be hard to really verify that. And if something can't be verified, you can expect that taxpayers would simply declare the most expensive apartment as the one they live in, because that would be the most beneficial for them. Related to the drop in prices. Although probably everyone saving up for their first apartment dreams of the biggest possible price drop, there is a group for whom too sharp and too big of a price drop could be problematic. At the moment when someone buys an apartment for $500,000 and takes out a loan for $400,000 and then has trouble paying off that loan, the apartment can be sold and the money from the sale can be used to pay off the loan, and we're back to square one. However, if the value of the apartment were to drop drastically and instead of $500,000 it suddenly became worth $300,000, then the person having trouble paying off the loan, if they wanted to sell the apartment, would only have $300,000 to cover the loan and would still have $100,000 left to pay. And that's a very bad situation when you end up without an apartment and still have a loan to pay off. What's more, even if the person didn't have trouble continuing to pay the installments, the bank could still demand additional collateral, and not everyone would be able to handle that. People with Swiss franc loans were in a similar situation, except there, instead of a drop in property prices, there was an increase in the value of the loan. And fortunately, in the case of the anti-speculation tax, the situation would still be much better. Because first of all, the drop in property value doesn't affect the increase in installments, which was the case for people with Swiss franc loans. And at the moment when the installments remain the same as before, meaning the ones we prepared for, then the difficulty with further repayment probably won't appear on a large scale. And secondly, there's no reason to expect such drastic drops. Contrary to appearances, only a really small group of people in the country own 3 or more apartments, so it's not like suddenly half of the apartments would return to the market and we would have total chaos here. So, this problem would likely affect only to a small extent, and only that group of people who would have trouble paying off their loan and took it out relatively recently. Nevertheless, it's still worth considering this risk and thinking about how to approach the topic safely. Maybe it's worth announcing changes well in advance so that investors can spread out their actions over time and the changes in the market don't happen too abruptly. Or maybe it's worth changing the regulations related to loans and shifting more responsibility onto the banks, so that a person taking out a mortgage is only liable up to the value of the apartment. That way, in case of some life setbacks, they wouldn't end up both without a home and still in debt. The rental market. We've all probably heard stories about landlords straight out of our worst nightmares more than once. And it's hard not to notice that over the past several years, there has been not only an increase in prices, but also an improvement in the quality of rented apartments. The professionalization of the market has its pros and cons. The question arises, won't limiting the activity of investors ruin the rental market? Won't we once again be too dependent on the moods of landlords who approach renting too emotionally? Risk. Give them an inch and they'll take a mile. I've come across concerns that introducing a cadastral tax on the third apartment will just be a gateway to introducing such a tax for all apartments. The thing is, it's not that simple. You could just as well say that introducing VAT was a gateway to raising it endlessly. But that's not the case at all. It's the same with income tax. But there have been some decreases recently. So why would the property tax expand? After all, introducing further changes is the same procedure that the government has to vote on again. We might just as well worry that we'll introduce the tax, go through all the changes, and then another government will come and abolish everything. And honestly, I think that this scenario is actually more likely.
The argument suggesting that introducing a property tax on a third apartment will just be a gateway to taxing all apartments is a typical so-called slippery slope argument. It means that taking one step, which is considered positive in a certain direction, inevitably leads us, like going downhill, to take several more steps and end up in a situation that we already consider negative. But for this argument to make sense, it would have to be shown that there is a necessary connection between the first step and the subsequent steps. That is not the case here. There is no reason for us to change the way we initially designed the property tax. Or we assume that we can only block a bad solution right at its very beginning. That means we can decide about it now, but in the future we won't be able to decide anymore. But after all, both introducing a cadastral tax on the third apartment and changing the way it would function require exactly the same effort, the same power, the same thing, that is, legislative changes. So in short, you could say that this argument is simply wrong.
Loophole-ridden law. Although in discussions about real estate investing, most is said about flippers and we picture a slick guy in a suit, the truth is that real estate is bought not only by individuals, but also by companies and funds. Although it's harder to visualize them, and they won't annoy us with bragging in YouTube shorts, the scale of their operations can be much, much bigger. They can even buy an entire housing estate. That's why if we tax individuals, ordinary citizens, people, the situation on the market will basically stay the same. And on one hand, politicians could be happy that they introduced the cadastral tax, but in practice it wouldn't change anything. Because each of us can also set up a company and buy 20 properties through the business. What's the problem? That would be the easiest tax to get around. And on top of that, it wouldn't affect those who are actually the biggest threat to us at all. There are many more loopholes like that which can be created, and they can be even more subtle. That's why we need to approach this topic carefully. I think that Representative Menson, if he wanted to, could really show his skills here, because finding tax loopholes is actually his specialty. And by the way, take a look at what he said about the cadastral tax just a few years ago.
If there are supposed to be taxes, then how many, which ones, and at what rates?
Taxes should be as low as possible. They should be simple and easy to collect. They should follow the good tax principles of Adam Smith. And now, which taxes are simple and easy to collect? For example, property tax. You can't hide property, unlike income. Every property can be measured, weighed, and taxed. That's a good tax. It meets all the principles of a good tax. May I, please?
Yeah. No, I pay this tax in America, and I've analyzed it. The property tax. So I have a property, it's in some physical condition. I'm not talking about a state in the USA, but in some kind of shape. It's in a condition that's getting worse. For example, I inherited a house from my father, and I just don't have enough money to renovate it, so its value is dropping. But yes, the state estimates this value on an ongoing basis, based on the average value of the buildings around. And they don't do a physical appraisal of every building or property every year, because that's impossible. The state estimates it, which means the state is claiming my taxes. And yes, I have a house, and it doesn't cost too much every year. We're leading to a situation where I have to sell this house. I could live there for another 30 years, it might fall into ruin, but I can't afford the tax because I don't have any income. I can't afford to pay the property tax, the real estate tax.
All taxes are bad. It's just about which are less harmful.
I don't like that at all.
I understand that, but in Poland we also have a property tax, but it's based on area. An area is very easy to measure.
I would cross this one out, the income tax. No income, no tax.
You mean you would keep only the income tax? Only that? That's a very bad tax. Yes, of course, income can't be measured. I mean, revenue can be, let's say, roughly estimated, but you also can't measure revenue exactly because revenue can also be manipulated. And as for what counts as a cost, anyone can come up with something. I work professionally with taxes, mainly income tax. I'm telling you as an expert in this field that income tax is absolutely useless. Income tax is paid by those who want to, not by those who should. If we have a property tax, let's say, calculated based on the area, you can't cheat there because everyone knows what the area is.
What will you do with an old lady who inherited this property or got it from her husband? She's getting older, she has no income, her pension is low, and the property is still attractive, in bad condition, but in a great location, in the so-called Bay of Pigs in Wilanów, Warsaw. And because the property is attractive, we have to hit her with, according to the general rule, high taxes. She can't afford it. So the old lady is supposed to move out of the house of course, but no.
You can't just put seniors out on the street.
Which she should die in.
You can set a tax-free amount so you pay starting from the second residential property, for example.
And by what right? All right, I don't like this idea. By tax law, all right, I don't like this idea.
We won't throw any grandma out of her apartment.
I'm a professional too. I run companies on 3 continents and I've been optimizing taxes my whole life.
That's why you like income tax and you don't like property tax according to your personal calculations.
Yes, but I have the same view as someone
Who rules the whole country doesn't have to care about whether you live well, but that everyone lives well and that the country develops properly.
As you can see, contrary to appearances, the property tax is able to gather supporters from the left to the right. Even President Naroki, who during the campaign wanted to include a ban on the property tax in the constitution, ultimately decided that in the form of an anti-speculation tax on the third apartment, it's actually fine. However, this is not a simple topic, and I definitely understand the doubts of people who approach it skeptically. A lot of questions arise. Wouldn't it be better to focus solely on the development of social housing? Won't the costs of introducing this tax be so high that it will become unprofitable? Or maybe a better idea would simply be a tax on vacant properties? Let me know in the comments what you think about this.
The housing problem is one of the most important social issues in contemporary Poland. To solve it, we really need 2 things. First, to reduce the role of apartments as investment goods. Second, to build municipal housing. In both of these goals, a property tax on the third apartment can be very helpful. Maybe only 1% of Poles would lose out from its introduction, while the vast majority of society would benefit. And that's why a property tax on the third apartment can be a litmus test of whether someone stands with the majority or with the wealthy developers and banks.
A property tax on the third apartment will really allow us to manage the housing resources we have much more efficiently. It will limit the scale of vacant investment properties and also empty undeveloped plots. So let's do it. Let's not wait for it. We should implement it for many reasons. As a result of introducing a tax on the third apartment and above, we expect a decrease in rental prices as well as a decrease in sales prices. Apartments will be more available, increasing supply and likely lowering prices. Of course, ultimately the solution is to support social housing, to increase supply in the non-commercial segment, whether it's cooperative, municipal or any other type, so that the supply of apartments keeps growing. The tax on the third apartment is primarily intended to civilize this market, reduce social inequalities, and prevent the emergence of a two-speed society, as well as to save us from this trap. Of the middle income trap, meaning that surpluses are simply invested in some luxury goods, which is a bit like the situation in the 17th or 18th century when the nobility would simply buy some expensive things. As a result, our cities were in ruins and the nobility lived off selling grain to the Dutch and exploiting the peasants. Well, I don't think we want to go back to that model today.
I know that different groups have different ideas about housing programs. Personally, I believe that we can't just offer one product and focus only on one product, because social expectations are different, traditions are different, and the tradition of owning your own apartment is deeply rooted. Therefore, I would introduce such an element and really emphasize it. Of course, I would consider it in such a way that it would be an element related to subsidies for young people to buy an apartment. Promoting families, promoting fertility, but also in such a way that banks or developers would not benefit from it, so that it would be on very healthy terms, and I believe such an element should be included here. Without a doubt, we need to equip local governments. Because local governments are not able to widely offer municipal housing, since these municipal housing stock is usually old, dilapidated, and there is no movement of residents there. And programs like these will make it possible for people who are alone, elderly, or, for example, have large, expensive to maintain apartments. They will also have an offer of apartments that are suitable for them, in good places, in good locations, with access to social services as well. I think this is a very necessary element as well. TBS and possibly SIM, although in my opinion, if we equipped TBS with all the tools that SIM has, they would perfectly fulfill this role in housing construction. Almost like municipal housing, because that's basically what it looks like. And of course, there are also those apartments for rent. Here, I would leave it probably to private individuals. I would keep state intervention to a minimum in this matter. So there should be a lot of ideas. It can't be just one element, but we should sit down and have a serious discussion about it.
In the video description, I'm including links to sources and guest profiles for this episode. Thank you all so much for your involvement, and thank you, dear viewers, for staying with us until the end. I'm looking forward to your comments. I encourage you to subscribe to our channel, and I hope we'll see each other again soon. Check out our other videos. Bye!